Welcome back to Squawk on the Street. Rick Santelli here live at CME HQ with the breaking news on this Thursday morning. Initial jobless claims expected to be 222,000, coming in exactly as expected, 222,000, which means it is up 6,000 from a slightly revised 216,000. Continuing claims for the week ending April 12th, 1,841,000. That's about 20,000 lighter than expectations, sequentially lower than the 1,878,000 in the rearview mirror, and 1841. How does that compare? Well, that would be the smallest amount since May of 24. So that really is rather interesting that we go back that far with regard to continuing claims. It really shows more than anything that both these variables, especially initial claims, are very well behaved. Our preliminary look at March durable goods coming in extremely strong, 9.2%. 9.2%. That would be the best since July of 24. You remember that month? That was 9.8%. Very healthy. But strip out transportation, and it all disappears. Zero. Goose egg. We're expecting up 3/4%. Unchanged. Zero. And zero, well, how does that comp? Minus 1.4 in Jan of 22 would be our comp on that. So it really does go back a ways. Now, let's consider, if we look at capital good orders, non-defense ex-aircraft, that comes in 1/10, up 0.1% as expected. And if we switch from orders to shipments, up 0.3, that's better than expected. And that follows that very robust up 0.8, that gets downgraded to up 0.7. All things considered, we see transportation had a huge impact on durable goods. The number really isn't moving the markets much. We're hovering at 382 in a 2-year, and that would be down 5. We're looking at 434 on a 10-year. That's also down 5. We have the last of $183 billion in coupon supply from the U.S. Treasury coming in at 1 p.m. Eastern today in the form of $44 billion 7-year notes. The 5-year auction yesterday wasn't terrific, but it was pretty darn good, all things considered. It was the previous auction, the shorter maturity in the form of a 2-year, that was a little bit on the iffy side. We want to continue to monitor the yield curve. It really is significantly steeper over the last 4 months, but it's come down rather dramatically from the 65 level that we had just 3 days ago. Andrew, back to you.